It's literally like this insane recipe for making a coin successful. It could be supply control. It could be distribution. It could be narrative. It could be who's shilling it. It could be the community. It could be the devs, the memes, you name it. It's like this crazy freaking recipe.
Each financial decision is not in a silo by itself. It has to be looked at and how it relates to something else in your plan. And most people are not looking at the big picture.
This is John Smallwood on Money Isn't. Today I have a very, very special guest. His name is Matthew Mery with one R. He is a crypto trader, and we're going to dive in today to really understand how, not necessarily how crypto works, but how the trading behind it and the psychology behind it and his journey. I think you're going to love his journey. Matt, welcome.
Hello, guys. My name is Matt Mery. I'm a college dropout turned crypto junkie. Maybe not junkie, maybe addict, maybe degenerate, probably degenerate because that's what a lot of this space is. But it's good degeneracy. It's not like crazy degeneracy. But right. That's me. And I guess I'll jump into my story, kind of how I came up and how I got into it.
Yeah, I mean, I've known you since you were probably 4 or 5. Yeah. 5, maybe 4.
Yeah, the old Sands Beach Club.
Sands Beach Club. And what was interesting to me is when you called me and said, I'm doing this and I want to talk to you. And I was like, oh, really? I'm the guy. Okay, cool. And that was a really interesting conversation. But why I wanted to have you on here today is you took a different route. You went to college and it didn't work. And tell me about that whole experience.
Yeah. So it was June 2020. I had 4 classes left in college. I was going to go for finance, minor in history. So just like the typical, I want to work on Wall Street, work the 9 to 5, do the commuting, all that stuff, which I'm very happy I didn't do because my girlfriend does it and she sees the people on the train after 30 years and they're miserable. No offense to the people on Wall Street. But
so true though.
Yeah, but it was June 2020 and this is before like the raging bull of 2021 and COVID and all the money printing. So markets were just kind of heating up there. And I opened up a leverage long on Bitcoin with pretty much the remainder of my money, give or take $500. And it was Bitcoin was 9,300. It was forming a nice round and bottom. And I completely forgot that I opened up this leverage long. And I'm at a pool party on Navasink River Road. And I get like 1,000 notifications. It's like Bitcoin just went up 40% in a single candle, like from 9,300 to 11.6. And I'm like, okay, like got to open up some long. So I log into my BitMEX account, I open up some new positions and completely realized that I was like 75x leverage long my entire net worth in crypto at that point. And I made like 6 figures like within 3 hours right off the bat.
So you're hooked.
So I'm hooked. Yeah. I mean, in 2017 had a similar experience too. It wasn't that much money, but that was just like the first biggest dopamine hit that I got in a few years in crypto and realized like, okay, I have some capital, right?
How long was that trade that you forgot? Like how long was
like
it actually?
24 hours, something like that. Yeah. Cause crypto's so volatile. So I finally had some money to play with and I was going into summer classes at Monmouth University. So I had 4 classes left, level 400 classes, terrible test taking, terrible at school, absolutely hated school. So
bored out of your freaking mind.
Yeah, I just didn't like it. And I was in school for 7 years. I was like failing out of school because I was literally skipping classes and I was sitting in the parking lot to leverage trade Bitcoin. To be like, and my mom would have my location, right? She'd track me. Hey, you're booked. Oh yeah, Mom, I'm in class. But in reality, I'm in the parking lot, leverage trading crypto.
I left my phone in the car.
Yeah, I left my phone in the car because I'm so focused on class. Not even kidding. So I finally had some money to play with, and I was like, all right, take a chance, right? So my mom is, old school Italian, very traditional. Go to school, get your degree. My dad is
get a good job.
Yep, my dad didn't go to college, entrepreneur, right? Just had a high school diploma. So I walked up and told my parents, hey, I'm going to drop out of college to do crypto full time.
They're like, Mom, what is crypto?
Yeah, no, they knew about it. Yeah. Mom wasn't very happy because once again, she's old school. My dad's like, follow your dreams, Matt. Hopefully it winds up working out because it's kind of what he did. And the rest is history. And then here I am in 2024 doing a podcast about my success in crypto.
Yeah. And it's an amazing ride. Right. And I want to, so you're in college. How did you even get interested in, like, because you could have traded, people were trading stocks, people were trading all kinds of things. Like, what, you've never actually traded stocks. You've only done
I've done
coins.
some call options. Yeah.
Yeah.
So it's actually pretty interesting for, if any young people are listening to this, is it all started from a game called the World of Warcraft, which is an MMORPG, right? And the best traders in crypto, they come from 3 different places. You have to be a poker player. You don't have to, but you're a poker player. You played RuneScape or you play World of Warcraft. Those are the best traders in crypto that I know. So
how come?
Because it's something to do with like MMORPGs and poker, where you have to strategize. You are pretty good at reading general markets. You know a lot about time zones, like when stuff is hot, when stuff is not. You're good at taking a risk. You're good at socializing over the internet, which is a huge plus in crypto. And also you kind of have, like, a lot of people in crypto play video games, so you're able to resonate with a lot of people. So it's like an easy conversation starter, easy to make friends, which in networking crypto is huge. But I played a game called World of Warcraft, and I was the #1 gold farmer on that server. In high school, sold gold to people over in China, paid for my first car, made $20,000 in high school doing that.
That's really amazing. That's freaking amazing.
So I was the #1 gold farmer, and it taught me more about the financial markets than my college did, right?
Oh,
supply and demand.
Incredible.
Like, when to buy, when to sell, like when to look for rare goods, like what to craft, like a bunch of different stuff. And that's kind of what crypto is, especially like meme coin trading and on-chain trading. That's kind of what crypto is. So I was friends with a guy back in 2012 who told me about Bitcoin. He lived in Detroit, was relatively homeless.
While you're playing a game.
While playing the game. Was a very good friend. Joseph Measle was his name. Haven't heard from him since 2017. But what he used to do.
You're listening calls.
Yeah. His mom was actually a drug addict.
Oh, shit.
And he used to steal her Oxycontin, sell her Oxycontin, and then buy Bitcoin with it.
Holy crap.
So 2017, 5 years later, he hits me up and he's like, yo, you remember me? I'm like, yeah, dude, what's up? How's it going? He goes, did you ever buy Bitcoin? I was like, no. He goes, well, it's when Bitcoin's like 6,000 before the run to 20K. And he's like, well, buy some Bitcoin. So after that conversation, never heard from him again. He's probably, on a private jet, like in the Maldives, eating grapes
so he came
and
in
drinking
and he sprinkled
sangria.
some wisdom on you, and you're like, okay, just because of that game.
Yep. And he just got me interested again. So download the Coinbase app. Like, obviously, like the unit bias is big in crypto, right? Because Bitcoin was $6,000, and I'm like, I'm poor. I'm working at a restaurant. Don't have much cash to burn.
Can't buy $6,000.
So I look at this coin called Litecoin, which is the digital silver, right? Bitcoin's a digital gold, and then Litecoin's digital silver, which is totally nonsense. But bought a bunch of Litecoin at $40, and then it went to $400. I put $1,000 in, went to $400, and then sold Litecoin and sent all my funds to a coin called Binance, which is now like the biggest exchange, but it was pre-KYC, so they no longer allow US customers. Then there was this new upcoming Chinese guy called Justin Sun, who was like Jack Ma's prodigy from what's the company name?
Oh, yeah, Jack Ma.
Alibaba.
Alibaba, thank you.
Yeah, so he was Jack Ma's prodigy, and he created a coin called TRX. Now Justin Sun's like the richest dude in crypto. So watched all of his podcasts, fell in love with the guy. I'm like, I'm going to put the remainder of my money into his coin called TRX, put $2,000 in. That went up like 2,000x in like, I think 36 or 42 hours in a matter of 3 days almost.
Oh my God.
And my 3K turned into like 40 something thousand. And then I found leverage, which if you're just getting into crypto, don't do leverage. It is the devil's drug. It's the worst thing you could possibly do. There's like I'd say 99.9% of people are bad at leverage. You need to either 1, lose it all 1,000 times if you get a leverage, 2, become incredibly lucky, or 3, just be able to like read data better than anybody else.
Which is really hard.
Which is really difficult because these leverage traders in crypto, right? You're trading against people with significant amounts of money. They have an edge. They run bots. They run scripts. They analyze open interest. They run print, which is analyzing individual volume in each individual candle.
Right.
So don't do leverage trading. So then I found leverage, and then
So this is when that leverage trade is on, though. like that you
This
opened
was
up
in
with?
2018.
Oh,
so there's a 2-year gap.
So you're doing leverage long before that other.
Long before leverage. And I lost money trading leverage for 2 years, made money. Lost money, made money. And
Inverse leverage also?
no, just straight like 100x leverage.
Okay.
Like put $1,000 in, I can trade up to $100,000 with leverage, right? 1% move liquidates you, that kind of thing. And I ran my account from, down from 30, 40K down to 1,000, back up to 10,000, back to 1,000, back to 50, back to, I'm not even kidding, probably 300 times I did that.
How was your emotions during that time frame?
Well, this is this is why I'm emotionally ruined. This is why, like, when my girlfriend watches this is why she's like, you always have no emotion, like you care about nothing. I'm like, yeah, because I've been liquidated, I've been scammed, I've been rugged, I've lost hundreds of $1,000s in the blink of an eye, and I'm just completely immune to it. And you can't.
But you've learned not to be emotional in that.
No, you literally cannot have
because
emotion.
The emotion destroys you.
Yes, it destroys you, one, and then it's like if you lose money, right? You don't want to be down bad, like get in this mindset, get down in this hole, be like, okay, it's time for me to give up, right? It's you need to just be like, snap back into it, be like, all right, let's try it again.
Which is probably the most unique skill in business, as a trader, as a person, is the elimination of the emotional reason to stop doing something.
Yep.
Right. So many people get successful, have a bad quarter, have a bad day, and they're like, oh, see, there's the evidence that I shouldn't continue this. And think about that. Like if you said, oh, mom, you're right. I'm not picking on mom, right? But like, or your friends, oh, you shouldn't do this because you're losing money in your emotional basket case. The reality is you learned not to have your emotions dictate your trades. Mm-hmm. And now you saw the end. You saw the value of what you could be doing. So it's like, okay, bad trade, take my money, go do the opposite trade or whatever it is. Like you work through this. That's kind of interesting. Like when did you have that shift? What was the catalyst that said, I can't be emotional?
I'd probably say so there wasn't a lot to do in crypto, right? It was in 2017, you would either the space was much smaller.
How many coins were there then? And there's like 24,000 today.
Probably 1,000 coins. Now on the Solana blockchain, there's something like 30,000 coins being made a day.
30,000 a day.
A day.
We'll talk about that later.
Yeah. So it was definitely a lot more concentrated. So there was a lot less to do. And then as you got closer to 2020 and 2021, there was a lot more to do in crypto, a lot different avenues to make money. So I'm like, okay, if I can't make it leverage trading, right, then I'm going to try to make it some other way. So it's like I kind of cut my emotion when I realized that there's going to be multiple avenues to pursue a profit in this space. So if I suck at one thing, I can try something out. And I know at some point I will make money. So I just said, screw it. I don't care if I lose money. I'm just going to put my head down and I'm going to try every single thing in the space. So I find something that strikes the bell.
It's that repeating lesson.
Yes.
This worked the way I wanted to. This did not work. Why did it not work? Why did it work?
Yep.
And you develop that pattern similar to what you got out of that game.
Yep. You find out what you're good at, right?
Interesting.
You find out what you're good at, and that's when it comes down to. And now in crypto, there's a million ways to make money. It's no longer before it was just ICOs, altcoins, and leverage trading. Now it's like a whole basket of things.
ICO is an initial coin offering.
Initial coin offering,
right.
Yeah, which was like a big thing in 2017. A lot of scams. It kind of went away. It's no longer a thing anymore. But that was probably the big hottest thing. You made a ton of money in 2017. I did not personally. I know people that made millions.
So people were basically saying, oh, here's this new coin. I'm going to buy it. It'll get a momentum. When that momentum slows, trade out of it. Is that what they were doing? Is that how they were making money?
Yeah, pretty much. Yeah.
Kind of like the penny stock days back in the late 80s.
Yep.
Yeah. Okay. So there was a whole bunch of stuff coming on. How do you decide to buy a coin or not to buy a coin?
I could talk about this topic for 30 minutes. A very loaded question. So it depends, right? So there's something called like utility coins or like real coins, right? Which is there's a product behind it. It's
When you say product, like what do you
it could be decentralized finance, right? It could be like staking, restaking, could be
What's staking and restaking?
okay. Staking is like I take Ethereum and I stake it in a protocol, right? And then I farm that protocol's tokens, right?
Okay.
And then restaking is like I stake Ethereum and then I restake that Ethereum to get like additional yield.
Okay.
So that's like decentralized finance, right? And there's a bunch of other things with DeFi. And then there's stuff like RWA, which is called real world assets, which is like tokenizing the world, a coin called Ondo, for example. And then there's like GPU coins, right? Like coins that, you know, they're running a bunch of nodes. And then there's like AI coins. So those are like utility coins per se. And like a lot of that comes down to just like kind of the team. Distribution is a big one as well, right?
So
like
knowing who's distributing it, that team.
no,
Okay.
knowing who's holding the coin, distribution of the coin, right?
Interesting.
So like generally speaking, this mostly goes for meme coins, but like, so it's like there's coins listed on centralized exchanges, right? With like real founders, like blah, blah, blah. And then there's coins that aren't listed on centralized exchanges, right? Which is decentralized exchanges, which is like you trade through Uniswap, or which is a decentralized exchange. You hold your coins in your MetaMask, your Coinbase wallet, right? And those are just coins that just launch on the blockchain without any funding whatsoever, right? It's just like a completely fair and free launch, right? Give or take all the insider stuff that goes on. And that's so coins, when you talk about distribution, right? It's how many people are holding a certain amount of this coin. Healthy distribution means that very few holders over 1%, right? Because if a coin goes to a $10 million market cap, right? They hold 1% of that coin. They now have $100,000. $1 million or $100 million market cap, they're holding $1 million, right? So the better the distribution, the less overhang there is. So
more people owning the coin. You don't want somebody owning 50% of the coin.
Exactly, yeah, because they could just full stack murder it with one single clip and kill it.
Trade it. Boom,
exactly.
done.
But then here's the counter argument to that, right? It's if you have a lot of people that hold this coin and it's either one insiders mean that not like insider traders, but somebody that either knows the team, they knew of this launch that was coming up, then they know the team has good intentions, right? Then you have kind of bullish supply control where all these people who aren't going to sell are going to hold this coin. So there's less coins available on the market for buying and selling. Hence, there's kind of a supply shock and the coin goes up. So it's kind of this special recipe of when you want to know when to buy a coin or not. But a lot of it comes down to attention, narrative, and distribution. And attention is probably the most important one.
And when you talk about the narrative, like what are you looking for?
So it's like meme coins. Meme coins are the hottest.
Define a meme coin.
Okay, a meme.
People are like listening to this now.
Yeah,
they're like,
okay,
what the F is this?
Yeah, all right.
Like their heads are spinning, right? Holy shit. So let's just go like, so a meme coin is what?
So a lot of people probably heard of Shiba Inu or Dogecoin. That's like
Dogecoin, which Elon Musk had.
Yeah,
right.
It's the number one. It's the first the first legitimate meme coin ever created, right? So it's a meme coin is pretty much what it says, right? They don't try to LARP as anything else, right? Like we have all these utility coins that say, hey, I own 19 mining rigs, GPUs, blah, blah, blah. But that's not the case. They're pretending to, right? Meme coins, you know what you're buying. So
they own something of legitimate value.
No, meme coins are like the bottom of the barrel, but it's how you make all your money in crypto right now. It's like we call it the meme coin super cycle. So it's like, all right, you take a famous meme online. Let's say like the picture of who's that famous basketball player that's crying with the pink background?
Oh shit, who is that?
You ever see that meme? Yeah, Michael Jordan. Yeah, crying, right? You take that picture and you do like JWF, Jordan with tears, right? Or JWT, Jordan with tears, right? Then they make a meme coin out of that, right? And then people resonate with the meme. They think it's funny. You build a community around it, right? And like ultimately, the community is what's really important with these meme coins. So you're taking a bunch of internet idiots and weirdos that come together over this like ridiculous meme coin, and they kind of grow this like loving to the coin and this bond to the coin.
So they're buying and selling that coin.
Mostly buying. I mean, yeah, selling of course, but like when you have a really strong community behind these coins, which means that. So yeah, exactly. Because
so the creator creates this meme coin.
Yep.
and he's selling little tiny stakes, but he doesn't want to sell it too quickly. But he wants to get this trend behind it.
Yeah, exactly. Yes.
Now, does the person whose persona is on that meme coin, is he or she
they are not affiliated? No,
in any form?
I mean, if they want to get affiliated, yeah, but 99% of the time, no, they're not affiliated.
Right.
Yeah. So the community, right?
So there's a licensing thing on that picture. As long as it's not licensed, you can do it.
Yeah, pretty much.
Okay,
It's the internet. It's crypto on the internet. It's like a complete free for all. It's a wild, wild west.
Right. Catch me if you can.
Yeah, it's pretty much, yeah. I actually would probably expect her to launch a crypto soon because there's a whole new wave of celebrities launching crypto, but I'll go into that later. So the community, right? There's like this app called Telegram. I don't know if you've ever heard of Telegram. Sure. It's like WhatsApp app. The meme coin creator creates a Telegram group, right? All the community members join the Telegram group. If somebody sees a tweet, they post a tweet in Telegram, they rate it, right? Meaning that everybody now goes on Twitter, community rates it, right? They say, buy my meme coin, buy my meme coin, buy my meme coin. And then once again, it comes down to attention, right? So what the community's job is to do is to bring as much attention as possible to that coin. Because if one person shills it, then another person shills it. And before you know it, it's going viral. And then it has a lot of staying power. And that's the main community's job. So then there's the whole attention narrative, right? And in crypto, as I said before, there are so many freaking coins.
So it's like an influencer almost on the coin. Is really to get that narrative up.
Kind of, yeah. I mean, it like I have a Twitter account with like 80,000 followers, and that's like how I started. But I won't say it for safety reasons. but yeah, it's like if somebody good is shilling it, you know that they have good intentions, right? They're not a bad actor. They're not taking paid shills, meaning that they're not getting paid to shill the token undisclosed, right? They bought it with their own money, so they're putting their mouth like they're
really putting their money where
the money where their mouth is. Yeah, that's real. That's good. But yeah, then there's coins that go up without having people shill it, right?
Interesting.
And it's just like a bunch of small fish, but meaning not rich people, like a bunch of believers just buying the coin. That's the funny thing about these people that don't have a lot of money in crypto. They will die for this freaking coin. They will go to bat. They will shill it.
And they're basically online just talking about
nonstop.
Nonstop.
Going to
in
public
every
Telegram.
Form.
Yep.
Telegram, everywhere.
Twitter, shilling, telling their friends, DMing every person in the world. They will die for this coin. And it's pretty crazy to see. And then you see people with larger accounts, right? They'll tweet about it. And then if it doesn't go well, let us move on to the next one. And then these people are the people that want to, helping the coin kind of excel to the next level.
What's like the staying power of those coins? Like, is it a quick trade or is it like a buy and hold?
It's super hard to determine that, right? Because a lot of these coins, it's like I did a giant technical analysis thread on trading meme coins. It got like 1 million views. It got a bunch of likes, and it's like kind of how to analyze how to trade meme coins. A lot of it is based off how like market cap thresholds, right? So it's like if I buy a meme coin, it goes to $100,000 market cap. That is that's like kind of the first block in market caps that the coin has to go to. And what market cap is, it's the way you weigh it is supply times price, right?
Right.
Yeah. So you have there's 1 billion tokens. The token's $1, right? The market cap's $1 billion, right? So
just like a stock.
Exactly. Yeah. So 100K market cap's kind of the hurdle. If it breaks 100K, then it usually goes to 1 million, right? If it breaks 1 million,
pretty quick.
Yeah, pretty quick. Yeah.
If it doesn't have that resistance to get up there, or if it has resistance getting up there, that's when it starts to fade, that's a quick out.
To an extent, yeah. But it's literally like this insane recipe for making a coin successful. It could be supply control, it could be distribution, it could be narrative, it could be who's shilling it, it could be the community, it could be the devs, the memes, you name it. It's like this crazy freaking recipe.
So in that meme world, like that's where people are making money now, not in going long like on Ethereum or Bitcoin or those things.
So yeah, so for the people watching this, if you want to get into crypto, if you have capital, right? If you let's say you have $100,000, download a Coinbase, you put 90K into Solana or FET or ETH, right? You're gonna get a liquid maybe 3 to 5x after all. You're not gonna make FU money, right?
Right.
You'll make a substantial amount of money, maybe enough for a down payment. You want to get a new Mercedes or something like that. But then if you want to make the crazy money, you take 10K of that. You download either a MetaMask wallet or a Phantom wallet. You get something called like
So Phantom and MetaMask, like, is that like what it sounds like? It's like true privacy.
that you have 100% control over your own assets, right? In a
Correct.
centralized exchange, Coinbase, Binance, you actually don't own those coins.
There you
The,
go.
the exchange owns those coins. Those are numbered on the screen. Hence FTX, what happened with Sam Bankman-Fried, there were numbers on a screen, right?
Right.
So like Phantom and Coinbase Wallet and MetaMask, you have 100% ownership of those coins. I could send you $1 million in 0.2 seconds for a 3% fee, and nobody's going to blink an eye, right? And that's your money. You can move that money freely.
Okay.
You don't have to do any verification codes. So yeah, you download a MetaMask or a Phantom, and then you get something called like a Telegram bot or a trading terminal, because using a decentralized exchange, which is like Uniswap or Jupiter, we call that raw dogging, right? You're going to be a lot slower. Your execution's not going to be as good. You're going to get failed transactions, right? Versus if you're trading on these bots, you're going to have a significantly larger edge over other people, because you can set certain parameters, right? Your slippage, you can ape coins almost immediately, right? And it monitors your trades. Versus if you're trading on something like Uniswap, where you connect your MetaMask to this decentralized exchange, you hit the drop down, you hit, okay, sell this to this, you have to change the slippage, then you're going to not you're not going to have as good as execution.
Slippage. That's a really interesting term.
Yes.
Caught my attention. What is that?
Okay. So if a coin has taxes, right? So which is this whole new stupid meta. It's a LARP for developers to make millions and millions of dollars without actually selling tokens, right? So every buy and sell has a transaction tax. Generally, standard is 5 out of 5. So
put that in real dollars.
So I sell $100,000 of that coin, I get charged 5%. Okay. I buy 100K, I get, so it's a 10%. It's a 10% round trip.
In and out round trip.
And these devs are making millions and millions and millions and millions of dollars. It's absolutely wild, but it's a better way for them to not.
Which is why all the big institutions now want to get into it, because 5 and 5 has not been around for a long time.
Mm-hmm. So if you have a coin with a 5% tax, you need to adjust your slippage to 6 or 7% so you can actually trade that token, because you need to pay that tax to the developers.
Cool. That makes sense.
Yeah.
So you're in this landscape, and I want to make sure I'm going to insert in the beginning of this also, like, none of this I'm recommending that you do, right, from a financial standpoint.
This is not financial advice.
Yeah, this is not financial advice. This is this is. I'm so intrigued with this because I want to. Everybody asks, like, what is this, right? And I'm like, from looking at it from the investment side, it is sort of like the wild, wild west, and it is something that creates a lot of fear for a lot of people, especially when you start talking about all these terms, because the terms are even so different than normal language. Okay, so you're in this thing. You've got the meme coins that are coming out. There's a methodology, which is sort of the gaming thing. It's almost like what happened with GameStop. It's like everybody got together and made that trade, and whether it had value or not, it was the perceived value getting behind it, which is really a different way of stocks run that way. When people get behind it, they do go. When people are selling it, it does go out. But it's an interesting. You're applying really good trading techniques, but at a much higher level. Like, the macro view of this is incredible.
It's not like, it's not like Wall Street where you're analyzing a stock, checking numbers, you're checking, Q3 estimates and all that stuff. It's like a whole different
There is no
game.
estimates.
No. It's just you and the markets and a bunch of people that are like-minded trying to make it out of the trenches.
Which is really interesting. So there's also like venture capital. There's coins, and that's different than a meme coin. What's the difference between that and a meme coin? And venture capital is sort of like a startup. Yeah. Startup. It's not a startup. Is it a startup coin, or is it?
Yeah. So you can so a lot of them do like SAFs, right? Which is like safe and token warrants. And then where you like investing in a coin, and then at some point they're expecting to convert like the equity or whatever to the token, right?
Okay.
And then a lot of them do depends how legit they are. So there's like a whole, I don't know what's the word I'm looking for, like a tier, right? So there's very, very legit, right?
Right.
Like And then you need to be an accredited investor. You need to be a VC fund. You need to have some major reputation. Like those are relatively hard to get into. But the thing about those is the valuations are crazy, right? You're investing at a $400 million val. You're usually getting like a 1 to 2 year cliff, something like that, meaning that you don't get tokens for 1 to 2 years.
So you have to have patience.
Yeah, patience, right? And a lot of patience, right?
Which is very the opposite of trading a meme coin. There is no patience.
Because the thing about those deals is that a lot of it is timing the market, right? Because right now, let's say the bull market lasts another year from now, right? And I signed a check today and I said, okay, my tokens are going to come out a year from now. Now the bull market's over, right?
We thought they're going to be worth 10,000. They're worth like
exactly
$10.
Likely you probably won't lose, but you're not going to be up that 30, 40, 50x multiple that you were, right? Where everyone else is trading the coin and you're not.
Right.
And then there's kind of the tier down from there where it's not the super legit stuff. So I do like Series A and they raise at all these crazy vals. They raise it like, maybe $30 to $50 million val, right? And that's the more that you start leaning into the more degenerate side of like raises there, where it's not as official, less paperwork, less big backers, but then they're more focused on the marketing side of things, where if you're investing in these projects, you're getting a % at TGE. So essentially, the more you move down in the val, the more degenerate it gets and the more % you get at the token generation event.
When it goes out, the more you're going to get on the back end.
When it launches, you get a %. Let's say you get 20% at launch, right?
Okay.
And the thing about getting that % at TGE is that if you're buying in a
TGE is
token
launch
generation event, as soon as that token is created, that's what it is. So the thing about if you get that 20% off the top when the token launches and you still have those 80% remaining vested, that 20% usually you've already get your initial back on your investment plus extra. So that 10 to like $50 million range, they focus on more something called, I hate to say this, if you ever watch this, please don't use the term. It's called KOLs. Key opinion leaders.
Interesting.
It's where it's like this whole new thing. It's terrible. It's where you have something called a KOL manager, where they reach out to people with large Twitter accounts and a lot of influence. And they say, hey, I have this project. They send the information, the terms, okay. And then you fill out a Google form. You send your money. You send USDT or USDC, which is a stable coin, to a wallet address, right? And then you have to perform a certain amount of tweets before the token launches, right? And if you don't, they refund you on your investment.
Interesting.
And it's this major headache. And then after you launch, right, that you have to continue to tweet or else they literally steal your tokens, right? Like I've had...
So it's a contractual obligation that you must be tweeting.
You must tweet and you must market for them or they will literally steal your tokens. So the way the cookie
and they have the right to do it.
Because you haven't signed any official paperwork, right? It's the wild west. Sure, I can go on Twitter and FUD them to the ground and say this project's dog shit. They stole money from me. Blah blah blah.
But if it's 100 to 1 against you, you're never going to make any movement. In that too.
So you invest in the project, right? You provide 3 tweets prior to it coming out. The project comes out. You get your 20% TGE, right? Let's say you invested 5K. Now you're at 20% is worth 20K, right? Okay, now your investment's up. What, like you're up 100K or something like that. Then if you don't continue to tweet, what these teams do is the teams don't allocate tokens to themselves. So it makes the distribution of the token look really good on paper.
Right.
They just take the coins from the people that are not tweeting, and now those are team tokens, right? Which goes
back to the team.
It goes back to the team, yeah.
And there's a certain amount of people that aren't going to tweet because they got distracted.
Yeah, exactly. Or the chart is down only, and you're just going to lead your followers into slaughter.
Yeah, why would I do that?
Yeah, and also you're up significantly against the people you're shilling it to, so you almost feel bad, right? But it's this giant thing that's come out. It's really annoying. I don't like the way the market's going, but that's kind of the 10 to $50 million. And then there's the heavy degenerate stuff,
right?
Where you're investing like 0.5 ETH, which is Ethereum, or 1 ETH, and you're getting 100% at TGE.
Oh, wow.
And that's degenerate stuff, but that's like how you print like that, right?
Like that.
Like 1 ETH to 100 ETH in 24 hours kind of thing. So that's kind of the landscape of current crypto investing.
So most people, when they think of crypto, it's Bitcoin,
Yes.
buy and hold, right? Or, and then now you got the meme coins. Now you've got this VC, you've got this thing. You're really in a portfolio, people that are really successful really aren't buying like the long end of like a Bitcoin type thing. They're more diversified into the meme coins and these venture coins.
Yes.
You mentioned stablecoin, right? I know there were some issues a few years ago with stablecoin not being stable.
Yes.
Right? Because in theory, the brain is, hey, it's stable. It's going to be $1. It's $1.
Yep.
And what was the issue there? Like, what caused that?
So, like,
literally, there was a complete disruption in value.
Yeah. So there's a million stable coins out there, right? But the two biggest ones are USDT, which is Tether, and then there is USDC, which is the one backed by like Coinbase and Circle, et cetera. And they're all backed dollar to dollar, right? So all these companies, like Tether I think they did like in Q1, they did like 1 something billion dollars of revenue just off that alone. So they have cash. Right? They have cash in the bank, and each one is back to back. But like if I take, $100,000 of ETH, I sell it into USDC, I now have 100,000 US dollars. That's convertible to US dollars through a centralized exchange immediately, right? I send that USDC to Coinbase. I say, hey, sell for cash and put it in my bank. I can have my bank in less than 30
So the
minutes.
theory is it's not going to move.
It can always be depegged, right? That's always a risk.
Which is what there was a big one a few years ago that got depegged. It was UST or something like that, or US.
So this is a whole another thing. So that was Terra Luna by Luna, right?
Okay.
It wasn't backed by dollars. It was backed by another coin. Essentially, it was like elastic, right? So if one coin moves too high, then the price of UST starts to depeg, right? So they kind of need to balance out each other like that. And that's actually what caused the crypto crash of 2022.
Right.
That was the whole start of it, was Luna, how that started. And this is crazy, but I'll give you a brief 2-minute overview. So what happened was you had a coin called Luna, and you had that had its own stable coin called USDT. It guaranteed 20% APR on that coin, right? So people,
I should put all my money in there.
But they put all their money in it.
Doesn't seem right to me.
And the crazy part about it was that you had...
And banks were paying 0.5 at that time. Yeah. Not even 1%.
And the crazy part about it is you had these legit companies like Galaxy, and you had Gemini offering 20% returns, but they weren't telling people that they were getting it from UST. So what they were doing is taking their customers' funds, putting it into UST, and then guaranteeing them a 20% return. So
and leveraged on it probably.
Yeah. So what happened was that USDT wound up repegging. The price of Luna literally went from $100 down to like 0.004 cents in like a day.
In a day.
Billions and billions of dollars were wiped out of the industry. Now all these companies that were lending their customers money are now insolvent, right?
Right. You got margin calls, you got leverage calls, you got everything going on.
And this is how the whole FTX crash happened, because they had they got killed by Luna, right? They got absolutely killed by Luna. So did 3AC, which was the biggest hedge fund, Suzu and Kyle Davies. They got hit by Luna, right? And then what happened is price started going under, and then all these DeFi protocols started, getting margin called. You had all these liquidations. ETH went to 800, right? So now all these companies are broke. No one has any money.
No one has any money. No one has any.
Everybody got liquidated.
And like, I know like Bitcoin being below like a $20,000 mark at that time was like really disruptive, and it hung in there, and then it dropped through, and then
to 16,
boom, everything freaking blew up.
It dropped through, went from 20 to 16 when FTX went insolvent. Yeah, because they lost all their money in Luna, and then they were lending out their money. But this is a whole nother thing. But essentially what happened was FTX got killed in Luna. They were using Sam Bankman-Fried had a hedge fund called Alameda that was using customers' funds, billions of dollars of customers' funds, to trade, to try to recoup the losses that they lost from those crashes. And then CZ, the owner of Binance, said, hey, your balance sheet is made up of $14 billion of illiquid tokens. You don't actually have this money. So people started to withdraw. They couldn't process withdrawals because they were insolvent. All their money was lost. And then FTX went under, and that was the big crypto crash from 20 to 16K. But this is actually a really good thing, right?
Which is not a big number when you think about it, 20 to 16 in the volatility chain. But the disruption was insane.
It was crazy. People killed themselves.
Yeah.
I had friends that lost millions and millions and millions of dollars. I know people that got rinsed, but you could actually now claim I think it's 90 cents to the dollar on FTX claims, so you can get your money back. But this was a really good thing because what happened is that whole bull market was just leverage, right? If everyone was giving money to someone, everyone was borrowing money. So the entire space was way over leveraged. So now this leverage doesn't exist anymore. The only leverage exists is that, like, exchanges, right? If you're trading on Binance, trading 100x leverage, right? You just open interest, which is fine. That's been around forever. Yeah. But you no longer have companies lending to companies, lending to companies, lending to companies, all promising X amount of returns. So wiped out all this leverage. So now the market is healthy. And this bull run is now fueled by institutional inflows, which is like the ETF. So now it's a much healthier environment for Bitcoin to actually go up because there's real demand instead of fake demand because of leverage.
Interesting. So my head is actually like spinning on this right now, right? But I mean, the possibilities of it are endless because the whole theory that when you look at it intellectually, blockchain and security and safety, right?
Yep.
How does that play into even the marketplace today? It's like, are people still thinking about that? Or is it all about how you're going to take these, like, the institutions, are they getting involved across? Are they staying in the big names, or are they going across?
So I mean, yeah, mostly it's mostly Bitcoin, right? Because if you want to size appropriately, Bitcoin's like the most liquid market in the world, right? It's like 24 hours liquidity everywhere in Bitcoin. So if you want to size, we're obviously
24/7. Yeah, 24/7,
nonstop. So if you want to size, you're obviously going to Bitcoin or ETH or Solana. I don't think any of these institutions are buying meme coins, right? There's too many potential like FUD scenarios with these coins where it could just evaporate out of thin air, right?
Right, which is too much risk.
First, Bitcoin, like the contract's not going to get exploited in Bitcoin, right? Satoshi, he might come back. Highly doubt he's not going to come back and dump his wallet with like 30% of the Bitcoin supply, right? There's the only really overhang with Bitcoin right now is the Mt. Gox coins and the Silk Road coins.
Okay, what are those? I don't even know what those are.
Really?
Yeah.
You never heard of the Mt. Gox?
I don't know.
So it was the biggest. It was the biggest exchange. It was what everyone traded on back in 2011, 12, and then it got hacked, right?
Oh, right.
There was like thousands of Bitcoins that were stolen. And then the US government actually seized them. So now people are getting those coins back. People
that they were taken from.
Yeah. And these are people that bought Bitcoin for 10 cents and now they're sitting on hundreds of millions of dollars, right? So every time the government moves those Bitcoin on chain, Bitcoin just crashes because they assume that it's going to be sold for some reason.
Because people are going to be like, oh my God, I got it. How much?
Yeah, exactly.
On my $10 investment?
It's like a scary amount of money. Yeah. And then you have Silk Road, which was the dark web marketplace where you could buy literally anything in the world. And they only took Bitcoin. And then the founder was arrested 3 or 4 years ago and they seized all of his Bitcoin, right?
Interesting.
So now that's in government's custody.
Remember that too. Yeah.
Now they own it.
So the government is hanging on to this.
Yes.
And they're slowly bringing it back.
Yeah, I don't know. I don't really trade Bitcoin anymore, but I haven't kept up with it. But yeah, it's definitely somewhat of a concern because you have all this overhang, right? But you're gonna hope at some point that institutional inflows and demand outweighs this potential overhang, where you have every boomer in the world saying, "Hey, I bought Bitcoin."
What, like, just jumping back here for a second. So you leave college.
Mm-hmm.
You start making the trades. Everybody's like, you have 4 credits left or whatever it is, right? And they're like, come on, just go finish. What you've learned in this, like last, 5 years that you've been doing this?
7 years this November.
So 7 years of a tremendous roller coaster. I mean, up big, down tremendously, up
Mhm.
big. What's the biggest lesson that you learned about yourself in this?
That I'm really good at taking nothing and turning it into something.
Right.
Whether or not it was in video games or I ran Instagram accounts during high school that I used to sell things, or was selling gold, or it was, or it was crypto. It's just like I I don't know what it is. It's I can just take the littlest thing and just somehow parlay it into this larger entity or amount of money.
Interesting. And but like, so you learn that confidence that you can take basically shit and turn it into beautiful stuff, right? And it's like, but that's a secret in itself, because people look at it and they see everything that's wrong. You see everything that's potentially right.
Mm-hmm.
Was that always in your background, or like, did you like, I'm trying to like, what was the shift? Because it's sort of like you're fighting school, you're fighting this, everybody's labeling you with bullshit. I got this diagnosis and this crap. And it's like, no, you're 100% focused on what you love doing. And you see this beautiful piece of shit and you turn it into something wonderful. Right. And it's like, when was that shift in like that confidence level to basically say, hey, I lost. I just learned so much.
Yep.
I'm never giving up. Like, what is that? When did that happen? Is there a spot? Like,
yeah, it was probably February after that lever trade in June of 2020. It was probably January/February where I had a small group chat with my friends, which if you're getting into crypto, highly recommend finding a bunch of like-minded individuals. It's the best thing that you'll ever do in crypto.
Right. Probably in anything.
Yeah.
By the way.
And I took all that money and put it into a coin called Cake. And literally
with a C or a K?
CAKE.
Okay.
Yeah, Cake. And I put all that money I made into a coin called Cake. And I was staking at that time for like 230% APR, which is crazy on a very large investment. It was printing out Cake. And
literally.
Yeah, literally.
Pink Cake?
Yeah. And I was like, okay, I have the narrative. I know it was a coin associated with Binance. I know that Binance is the largest exchange.
Safe.
Yeah.
Relative, yeah.
BSC, which is Binance Smart Chain, which is their version of a layer one, which is like Ethereum's competitor, essentially with cheaper fees, is going to be huge because Binance is still not KYC. It's still the easiest way for normies to onboard. And this coin is something that I could probably just take a massive bet on and ride off into the sunset and potentially make 7 figures. And when I did that, right, and this is January, I already knew I was going to drop out of college.
January 21.
21, yeah. I already knew that I was dropping, or I already dropped out of college.
Dropped out of college.
And I was like, look, I've already gone 6 months, 5 months without being in college. I put 100%, 24 hours a day during that time period to dedicate fully to crypto.
You weren't playing video games anymore. You were doing this. I
quit, yeah.
Yeah, so you're doing this full time, 100% of your energy.
Yeah.
Like, make this cake trade.
Yeah. Like, girlfriend almost broke up with me. Like crazy stuff.
Yeah.
And make this cake trade. And I'm
you're
like
freaking nuts at this point.
Yeah. It's terrible. And then I'm like, all right, I can take the chance here and risk it all because I literally have nothing to lose, right?
It's just money.
It's free money too, because I only put in $1,000 to begin with, right? That was my cost basis, was $1,000.
Yeah.
So
into shit.
Yeah, into a lot of money. Yeah.
What people dream of.
So, and then if I've already done it once, I know I can do it again. I've done it twice. I can do it a third time, right? So I said,
do it 100 times. Do it 600 times.
So I said, let me just
6,000 times.
Take a chance. And I took a chance. And then I bought Cake at 70 cents, staking for 253%, 300% APR, and went to $46. So, and that was on
7 cents.
Yeah. No, I was at 70 cents.
70 cents.
Yeah,
okay.
but that's still like a liquid 60x or whatever. And that was on size too. That was also with getting like hundreds of Cake coins a day from staking. So then I was like, all right, now I have all this money and I know that, okay, I'm just going to diversify this into other cryptos, Binance Smart Chain, ran it up and then lost it all and then ran it up again.
So, okay, so you basically learn, and I want to frame this because this is this whether you're going to trade crypto or you're going to trade securities or you're going to be the best at whatever you do, you realize this is a game.
Mm-hmm.
And I'm going to play this game to my best of my ability. And I'm going to have confidence that shit will go wrong and shit will go right. And if I play it enough, it goes right more often than it goes wrong.
Yes, that's exactly it.
Right? That's it. And that's so amazing
Because
to me.
I am not kidding. Everybody that I know in crypto that once had no money is worth 7 figures, millions of dollars.
Correct.
They just never gave up. Like there's very few people within my circle that have gone broke and not been able to make it back.
Correct.
And that's the thing about crypto. If you put 100% of your energy into it, you will make money. There's absolutely zero doubt about it. It's just whether or not you keep that money, right?
Right. But it's that's in anything that you do. Like you could be a business owner selling a widget. If you become the widget expert and you get your widgets out there and you get that momentum and you get that narrative behind your widget, people stand behind you and they buy your stuff.
Yep.
Right. But there's points where people aren't buying your stuff and people give up. That's the energy that the reason why I wanted you on today was the story that you told me when we first got together. And I was like, what?
Yeah.
I was like, what? Like, I was literally, I can't believe that you went from here to unbelievable money to nothing. Most people that I've seen in the financial services industry or whatever, when they lose, very few people battle back. Right. And it's when you battle back and you see the potential, that's what I'm focused on. Like the news now is like, Tom Brady just got roasted, right? It was on one of those things. And it's like, he lost $30 million. That must have come up 400 times.
He'll probably never touch it again.
You're right. But he's now stained from it. But I wonder if he made it all back. But he would have said, dudes, I made it all back.
Yeah.
If he did, right? So people get involved in it. It's like everybody, he lost this. Smart people lost this. And it's because they were dabbling in it. That's one of the dangers that you see it in the momentum of the stock market. It's like, I remember back in the day, there was a stock called Qualcomm, which was the phone manufacturer. And I think it was like 2099, 2000. I forget when it was. And I'm brain dead at the moment, right? From this talk. I'm just kidding. But it's like, it hit $400 and everybody's climbing in. It never got anywhere near back to that. Like it crashed. People like, see, when I invest in the stock market, it's over. I hear that like 400 times.
I buy the top.
Right.
I'm the kiss of death.
I'm the kiss of death. And it's like, no, it's part of the game. The game is like you buy it, you trade it, you sell it, you hold it, you do you're doing options, you're doing all kinds of things. You're not just going along, right? I mean, you're using options, you're using strategies to protect your downside.
Yeah.
Some things that you weren't doing 3 and 4 and 5 years ago because you didn't know that it even existed.
Yeah, I'm cashing out more money to the bank this time.
Right. Which is,
That's why I'm here. So I can be with you so I can diversify my portfolio and have structure in my life.
Right. And one of the things that you said to me was like, I got to get that safety net behind me. Just so I know that no matter what happens, I'm going to be good.
Yeah.
And I think my position is you're not, in essence, a crypto trader. This is much more than crypto. There'll be something else.
Yeah.
The skills that you've learned and you've mastered are so much different than what other people, they come out of school, they get the finance job, they're sitting somewhere and they do one thing for 40 hours a week.
Yep.
And they move debits to the wall, credits to the window. I forget. I think I have that opposite in accounting, right? But it's like they can't make a difference. Like this is an entrepreneurial side. Like you're taking nothing and turning it into something. And then but where do you see yourself? Like where do you see the crypto markets? Like, do you see this meme and now there are celebrities that are out there and they're posting these coins and what do you see happening to this? Does it become a different market 3-4 years from now, or is it going to be the wild, wild west?
Yeah. So I think in order for the market change, like AKA Bitcoin's already changed. It's trading differently than it used to just because of all the institutional flows.
And the ETF.
And the ETF, exactly. But in order for it to really change, like retail get in, you need Bitcoin to break all-time high again. You need to be comfortably above the $69,000.
Yeah, and we're so far. We're still about what 65.
60, yeah, 60
this morning
because of the CPI numbers yesterday. It mooned a bit yesterday, but yeah, about 67.5 now.
Okay,
but so the thing is like the younger generation, like kids are antisocial, they're lazy. No offense to anyone who has children out here. Maybe you guys
your kids are special.
Great
your kids
parents.
are special.
Yes, you guys are great parents. But they play video games. They like to talk on the internet, right? Most kids don't want to go to college anymore. Only like just because like they scroll on TikTok. 14 years old. It's like, oh, I turned $3,000 into whatever selling Amazon ads or whatever, or Sammy, whatever the hell they sell online. It's like this whole, and yeah, especially with TikTok now, how it's like polluting kids' brains of how you can not go to college and make money X, Y, and Z, which is good.
There's again, for every 1,000 people that are trying to do this, there might be a half a person or one that actually has that success.
Yeah, exactly.
But it doesn't mean you shouldn't try.
Yeah.
That's the thing. Like if you think you can be an influencer, there's so many different ways to make money now. Like when I graduated college in 1990, right? You went to work. You didn't have this system, right? And now to go on and to have a YouTube channel or to have a TikTok thing and to get the influence and then get the ad stuff, like the way you trade is no different than that structure, because it's like you have to put the work in to be that successful person. You're not going to be an influencer without putting the freaking work in.
And what's funny is after my parents hounding me to go to college and schools hounding me to go to college, the most successful people between 24 and 27 that I know are either crypto, they're entrepreneurs, they're doing something with social media, YouTube, like that, right? It's all these people that went the complete unorthodox route, took the chance, are now absolutely killing it at their ages.
And I'm seeing money in this space that I've never seen. I remember in the early 90s, late 80s, early 90s, I got introduced to a guy who shorted the market in 87. Made millions. He was in his 20s. And it's like, but he never could replicate it again. So like in your 20s, you're now retired, but now you can't replicate it on your own portfolio because there was something that you didn't have that same success.
Mm-hmm.
In the space that you're in, the quantity of stuff that's going on, 30,000 coins, there's a lot of room in this marketplace. There's a lot of room on a YouTube channel. There's a lot of room in a persona.
Yep.
And then like what I'm seeing is like, if you could combine your social media following with your crypto trading, like, holy shit, what could you do?
Yep.
I mean, how many people really need education on this?
Mm-hmm.
Like people are afraid. Like I hear kids, and I'm going to talk about kids for a second, kids in their 20s, right? I'm afraid of the stock market. Why? I don't want to lose money.
You have nothing to lose. You're freaking 20 years old, dude.
like, so the market goes up and it goes down, and goes up and it goes down. But the trend is up.
Mm-hmm.
The trend is up. And if the stock market loses all of its money, the world is going to blow up.
Yeah, then you're doomed anyway.
It doesn't matter. Real estate's worthless.
Yeah.
I mean, they turn the power off, like Bitcoin's doesn't have a lot of value.
Yeah.
So people talk about like Bitcoin mining,
mm-hmm.
right? Did you ever do that?
No, never touch mining. It's too much electricity. It's not profitable. You got to be like in the middle of Alaska where you got to have,
cold
coldness. Room. Yeah, it's crazy. But not my friend, this guy I know, he had some famous tweet that always circulates once in a while. It's like, when you're in your early 20s, you have about 4 or 5 years to hyper gamble your way to the top, or else you're going to be a wage cuck for life.
Yeah, that's really interesting.
Yeah. So like when you're 20, 21, 22, right? Like it's worth exploring something like crypto because like, what do you have to lose? Sure. Right. You have pressure from your parents. You have a lot of social pressure. Like, oh my God, they graduated. I'm 2 years out of college too late. They already have a job and they're established. Right. Like I started my life late. I didn't start my life till I was 25. I was in college for 7 years. I was in Brookdale for 4 years, which is a freaking sin. Never go to Brookdale for 4 years.
It's a 2-year. It's a 2-year school.
Yeah, it's a 2-year school. Yeah, but I started my life late, and I took the chance. And because I started my life late, right, I've had very great success of the last 3 years. But like I took that hyper gambling route at 18, 20, 21, 22. And then it wound up working out. It's not for everybody, right? It's not going to work for everybody, but like just the way that I know, I'm not knocking 9 to 5s. Like you guys have structure. You can put your slippers on at 5 o'clock at night when you come from work and not think about your job, right? Like I don't have work. I work 16 hours a day. I wake up 4 o'clock in the morning. The computer.
Your money's moving 24/7.
Yeah,
there's no stop.
My portfolio goes up and down, crazy numbers every single day. But like, but yeah, I just think the world is starting to go a different place. It's now you graduate college, you spent $300,000 on your education, and you go for accounting, and you're making freaking $60K a year, 25 years old. You can't survive off $60K a year.
Somebody's telling you that you're going to become a middle-level manager at some point.
Yes.
And you're going to be working 80 hours a week.
Yeah.
For $120,000. Yeah, yep. Exactly.
Yeah.
Tony in the background there.
And
but it's like you have control. You're an entrepreneur.
Yep.
You just chose this space.
Yep. And it's not for everybody, People want that, right? I don't blame you if you want that. You have a healthy life. But I don't want to work till I'm 60 years old. I want to be retired in 5 years, as pompous as that sounds, but I don't.
But your retirement's not going to be, and I've said this to you, you are wired that you'll never stop.
Yeah.
It just changes.
Just changing it's not being in the trenches, being in Telegram, buying $1,000 market cap meme coins every day. It's taking a step back, having real structure in my life, want to have kids, spend time with my kids, like being somewhat of a normal human being.
Yeah, being able to go to practice, being able to take them here, go on vacation, to live a life. But it's sort of like as you transition, you become more diversified, more protected of the wealth, because that swing will create, like as you go down a timeline and you are 35 and you are 40 and you are 50, it changes. Like Buffett, you think about Buffett, what he was doing in his 20s, he was mastering his craft.
Yep.
It was a different craft. Now he's 92, 93, right? I don't even know how old he is, but he's been compounding his money forever.
Yeah. Right.
There are certain principles that if you understand money and you understand, right, there's something you get from this beyond the money. Money's one part of it, but there's like a reward system that you have, right? Like, how do you reward yourself?
By taking my money to the bank. That's one.
That's a big reward. That's like,
that's
like
my reward.
I remember when we first started, like, this is awesome.
Yeah.
Like, just awesome.
Yeah. Which is always good, right? But then that becomes with an opportunity cost, where if I would have left that money in crypto, I could have potentially turned that into a 10x. But I'm past that now, where I don't want to risk a crap ton of money anymore. I'd rather take that money out and have some more stability. Hence why I'm coming to John Smallwood. If you're listening to this, great financial advisor, highly recommend him.
Thank you. I appreciate that.
Yeah. So,
not the purpose of the conversation, but thank you.
So hence why I'm coming to you. And also, like, networking is another huge reward. Like, I've met so many freaking awesome people. It's people from all over the world, different nationalities, different races, different personalities. It's just
which is beautiful. It's a worldwide spider web of connections and people that can just, like, where you're gonna go. Is unbelievable. And there's like, those connections are the rewards that you don't even know what they're going to yield.
It's like when I went to Dubai back in April, I had great connections, right? First night was on a 150-foot yacht party with like free Clase Azul and like crazy stuff. Like, then I was at Crypto Fight Night, which is the event there. And I was in a suite with like free booze, free food, with like a bunch of millionaires. And then
not just millionaires,
multi-millionaires. Yeah. So it's like, connections are really awesome. And, it's really just be nice to people, have it some kind of a two-way relationship where don't be a complete value extractor, where if they keep feeding you stuff, make sure you give them a little snack back. Like,
because it makes sense.
Because it makes sense, yeah.
I'm going to get a reward from you. You're going to give me a reward. You're going to give me insight. Hey, I'm doing this. This makes sense. Hey, I did this. This doesn't make sense. Like that in the industry, like in my business, I have a core set of people that actually everybody shares. And there's people outside of that realm that don't share. And you stop sharing with them because it's always a one-way street.
Yeah.
That's amazing.
Yeah. I mean, I have this new Rolex that my friends bought me because I'm always helping them out. And they said, hey, let me reward you. You never asked for anything. We're going to get you a Rolex.
And that's got like real hard value to it.
Exactly.
So like,
So this is something real instead of some vaporware cryptocurrency coin.
Did they need like a crypto Rolex with like a crypto on it or something?
Those are
like
probably APs and Pateks. Those are the crypto Rolexes.
Yeah.
But yeah, networking is a huge one too. And that's also another topic of conversation. It's networking. It's literally just like one relationship that I met for some guy on Reddit back in 2017 is the reason why I know everybody who do today.
One guy. His name was Matt Mendez.
No longer friends with him. We had some differences, but he introduced me to a guy called Ali. Ali was connected with some other people. Don't like Ali now. We have some differences as well. Then I got connected with those people. Then one relationship led to next. Now I know a crap ton of people in this space. So it all it takes is one person.
Right. And people come and people go for reasons. But there's this thing when you find the right people to connect with, and it's everybody's getting together for the same purpose. But when they realize we're not against each other, we're with each other.
Oh, and there's nothing better than making money with your bros. Yeah. It's so much fun. You guys all buy coin. You're up 100K. Everyone's just spamming telegrams, stickers, shit posting a chat. Like bears are fucked. It's great.
I love it. So as we wrap up, if you had one thing that you would have done differently in the last 7 years, what would it be?
Oh boy. All right. One thing I would have done differently is probably be more curious.
I am so freaking happy. Curious about
in crypto, if something catches your eye, right? Something new comes up, something catches your eye. It makes you double take. You want to spend 2 minutes about it. Spend time reading into it because that 2 minutes could literally be a life-changing opportunity.
That I am telling you, being curious about whatever you're curious about is a life-changing opportunity. That is a fabulous lesson. That might be the biggest lesson of the day or the week or the month. I mean, seriously, you killed me, man. That's just because people aren't curious.
No.
And they're stuck and they can't see why they can't make money. Well, if you're not curious, you're not going to make money. I don't care what you do. Like, I'm curious. Like, when I sit with somebody, I'm like, so you work for XYZ. How do you become the upper echelon? Mm-hmm. And they're like, they have no idea. Nope. I'm like, well, if you don't know how to get there, there's a clear-cut corporate ladder. Uh-huh. How do you get there? You gotta get in the way of other people. Like, in high school, my prom date is a very successful entrepreneur, business owner, corporate executive, publicly traded firm. Mm-hmm. And she was so driven. She was so curious. I wish I was as curious as she was when I was 18 years old.
Probably worth hundreds of millions now.
Yeah. And it's like, what was that switch? If you can find that switch and be curious about something, it doesn't matter what you're curious about, because within the realm that you're curious, there's tons of success. People say, follow your dreams, follow your hobbies, do what you're passionate about. Well, every passion can be profitable. Mm-hmm. How do you do your passion profitably, and how do you turn it into a business? Like, I have this fabulous client that loved antique military weapons, and he became massive collector of antique military weapons. And then they do knockoffs, and they replicate. They're replicas. Mm-hmm. So you can buy replicas of these. You can buy the real thing for $200,000, or you can buy a replica for $40,000. Mm-hmm. Or $4,000 or $400. And he took a passion of collecting and turned it into this massive business.
Really cool.
Right? So like, that's the story that I love, right? I want to thank you for being on this podcast today and sharing this amazing journey. I'm sure we're going to get blown up after this. Like, meaning people are going to ask us a ton of questions and we're going to get a list of questions. And what I'm going to want is, let's go through the questions.
Yeah.
Like, let's have some fun and get back on and do this again, because what I learned on this call today, which I've known because I'm 56, but sometimes you have to learn things again, is the curiousness.
Yep.
Right. And that passion to say, I'm focused on the outcome, the long-term vision. I'm going to have obstacles along the way. Those are just fuel to make me better.
Yep.
Oh, if I didn't have that bad trade, I would have never made that second and third trade.
Exactly.
Right. And it's the second and third trade that really made you successful.
Yep.
And the 10th and the 100th and that, like, that's incredible to me. So now I'm going to wrap this up.
Yep.
And I'm going to put a huge disclaimer on this right now, right? Because in financial services, crypto is one of these things that's really interesting to a lot of people. People are really afraid of it. In no way are we recommending that you trade crypto, you open up any of the things that we discuss without doing significant, curious research, okay?
Yep.
But we are not saying to do this in any form or fashion. But what I want you to do is to explore your passion.
Yep. If you have a passion for crypto, which I recommend, explore your passion for crypto.
Real estate, investments, whatever it is, crayons, whatever, like people collect stuff. Like there's a lot of money in collectibles. Like I was sitting with a client yesterday. He buys antique cars. He buys them cheap and he flips them. He loves doing it. It's a passion. That's what he knows, right? He buys boats cheap, flips them. Like he just has fun. But so I'm going to say this to you. Our journey together over the next 20, 30 years is going to be amazing because I know that spider web is going to take you places that you never even dreamed of.
I hope so.
And I don't.
I think I know so.
I know so.
Yeah, I know so.
I know so. And I'm happy to be along the ride on this. So I'm going to reach across and say, thank you, man. This is awesome.
Thank you, John. I appreciate it.
Thank you. Awesome.